Okay, guys and gals, about 10 seconds of the obligatory disclaimer. If you want to read the whole thing, just pause the video. Let's take a look at the stock market and see what's happening today is, well, it's Sunday night, so futures have just opened. We're looking at the S&P 500 futures. Okay, the continuous contract right now is March of 2023. Today is February 5th, and this session that we're looking at here is actually for February 6th because it's, the night before. You can see the market right now is trading at 4138-ish, 4139. This is a members only video, so I'm going to keep this short, 5 minutes, guys. Going to try for 5 minutes. What do we got going on here? Well, we got some divergence warnings saying the market's is going to pull back, but that doesn't mean it's going to do that. There's divergence warnings also on the SMI. So, when we see this, often we see pullbacks. So we're going to keep a close eye on that. But that may not happen. So we're waiting for some confirmation on the certainty rate, which is this indicator. We don't have weekends obviously on this chart, but if we did, we'd see basically just see some zeros. Technically, they're at like 7, and I think 7.2 is what they came in over the weekend. That's really low. That's not even worth mentioning. Okay, it's just basically if it's below 8, I just registered as a 0. So there's nothing on the certainty rate that's telling me expect some extraordinary change. All right, it could still happen because this right here, like I said, often you'll see pullbacks, but not always. And let me give you an example of that. Let's go back, see if I can find it. Right here. See these two right here? The market didn't pull back at all, just chucked sideways. Okay, that's all it did. And it happened to be right at a cycle low, this cycle, which back here was still valid. Okay, so it's very possible. I'm not saying this is going to happen, but it's possible this just does like that and then takes off. And that's all we get. We just don't really get any kind of serious pullback. Could be like that. All right, that's possible. The MACD down here is only at 56. That's not really low, but it's kind of lowish when you're talking about peaks. Now in this bear market, 60, 65, even 50s we've seen pullbacks because when you're a bear market, this number will be lower. Just whereas when you're in a bull market, that might get as high as 90, right? Get crazy way up there. But you can see the MACD is still pointing up here. All right. So right now, as of today, what I would say for members is I wouldn't make a trade either way. Not short, not long. I just definitely, for me personally, I'd wait. I added in the I think this is called the, what do they call this? The MOBO? I think it's called MOBO. I don't remember. So I'm just put some color coordination in here. You can see the market's very strong right here going up. We got this cycle low right here. And that's maybe all we get, guys. Just little something. Okay. And then a big huge bounce. Two other things I want to mention. I added in what's called REM, or reverse engineering MACD. And this is on the TOS platform. You can go in and make adjustments, and I'm only showing 2 of the lines out of the 4. But often this indicator is very helpful. You'll see like right here where it crossed over. Wow. Here. Look at that. Bing. Here. Wham. Here. Okay. Let me just see where I'm at right here. Yeah, took off. Well, pretty snazzy stuff. It isn't always perfect. There's times it doesn't get it right, but it's pretty snazzy. I'm going to keep an eye on this indicator. Looks like it's only like happening, you can see how far apart they are, right? August, September, November, over here in late December. So it's not something that can be used on a daily basis to make daily trades, but it's good for really big changes in the market. All right. The other thing I wanted to talk about before I finish up this video is, see, there was something else on my mind here. Yes, okay. I added in the 200, this is a 10-month moving average, which is for trading days. We have about 250 trading days in a year. Sometimes it'll be like 251, 252. So I just took 251 and came out with a 10-month average, about 209 days, okay? This is a really, a lot of people use the 200, but the 209 or 10-month is a little bit more accurate, okay? So you can see, I use the 50-day moving average a lot too. It's very, very helpful. But you can see right here, they're about to cross over. It's about to cross over, right? It's trying to cross over here. So we're going to see what happens there, because this is a pretty key moment in the market right now. Let me see if I can get the 5-year on here. We'll take a nice big look at this thing. There we go. All right, nice. So you can see the 50 with this light blue line. That's the 50-day moving average. You can see all back here when the Federal Reserve was jacking up the market, and near zero interest rates and all that BS they were doing. BlackRock was manipulating the market. That's all this junk right here, right? Just like loose money policy all through here. This went on for decades, this kind of nonsense. But anyway, you can see how it would come down, go through the 50-day moving average, come back up, and just, and now we're below it. Occasionally it comes above it. Here it got above it. And now we just got above it again right here. Righty. And the 200-day moving average, look at this, guys. I mean, you could just rely on this thing. Of course, the price is way removed from this on this kind of scale. Okay, but if you just traded, if you just used the 10 month, sorry, that's 200, the 10-month moving average, and if you just said, I'm only going to trade on that, which not very few people can do that, but let's just say you did that, and you stayed in the market, even in this and this and this, you just refused to get out. My goodness, man, you were making a ton of money. You're above, the whole time you're above this 10-month moving average. And if you got below it, you said, well, I'm just going to short. Anytime we're below this, I'm shorting. We get above it, I'm gonna get out. If you shorted over here, you just did that, got way up here, nobody's gonna stay. I mean, very few people are gonna stay in this rising phase, but if they did, you still would have made money, right? Shorting and staying in it. Of course, realistically, can you short for that many months on end? Not many products are gonna let you do that unless you're trading some type of futures or options way out in the future. Then you could get away with it maybe. So some interesting stuff to look at there. So just my take right now for the short term, getting back to the more short term look at this, I don't see a trade here. Not right now. There's nothing to trade right now. Not in the S&P 500. There's just not enough here for me to take a trade. My instincts tell me if we don't get confirmation the data like the certainty rate and a big pullback, it should show up in the certainty rate if that happens. So we'd be waiting for a spike in here somewhere. If that doesn't happen, and this thing's just a little shallow little dip, we're going to know that pretty soon in this rising phase right here. Okay, which is, let's see, when does that start? It starts today. This cycle starts today. This one starts on 2/8 in 2 days. So they're all starting at approximately the same time. 2/8 and February 8th and February 6th. So we're basically at the start of a new cycle. All right. So if we don't get some kind of like big pullback here, then I see this thing just curling up and taking off. Okay, I'm reluctant to make any trades because I've learned by looking at this Big Daddy, you really got to be careful. Like I said, one more time, we may just get some sideways junk here. Right, in a cycle low like that, and then it just takes off. So I'm waiting to see how this thing's going to play out because I'm a little bit cautious when I see this kind of going on right here. I'm not willing to make a trade, short or long. I just want to wait to see what happens. Okay, that's my 2 cents on the market right now. I don't think it's tradable at the moment. I think you just got to be patient a little bit here to see what this thing's going to do as this new cycle begins. Okay, whether we get to any kind of pullbacks at all, do we just get a stall in price and then it takes off? Right now, I mean, this thing just looks like it wants to go. And 4327, it's possibly obtainable if the pullback doesn't happen. Okay, that's it for now, guys. Hope you enjoyed the video. Talk to you all real soon again next time.